It's 2025 and saving alone won't cut it. This is your beginner's guide to investing. No fluff, no BS, and no fancy finance terms. What's up everyone? I'm Kevin Ziegler. I make videos to help you grow your income, mindset, and freedom. Before you begin investing, it's very important to have an emergency fund of around 3 to 6 months of your living expenses and a high yield savings account earning interest. This way, if your investments lose value in the short term, you're not under any pressure to take it out selling at a loss. Let's begin by defining investing. According to Investopedia, investing is allocating resources, usually money, with the expectation of earning an income or profit. With investing, the goal is to beat inflation and build long-term wealth over time. You can use stocks, bonds, real estate, precious metals, and even cryptocurrency. So why do you need to invest in the first place? Glad you asked. If you're saving your money in a bank instead of investing, your savings are being eaten away by inflation over time. Think of it like a melting ice cube. Investing gives you freedom, stability, and options, and even small amounts over time will compound and add up to a large amount. The best way to start here is with the stock market, mutual funds, index funds, and ETFs. Take the S&P 500 for example. You can realistically expect a 10% annual return from the S&P 500, although over the past 10 years, the average annual return has been closer to 14%. A staggering 14% annual return. By investing in the S&P 500, you're taking a lot of the guesswork out of investing. The index includes many of the largest companies in the world, including Apple, Microsoft, Nvidia, Google, Tesla, and many more. Why have one when you can have them all? Let's take a look at what could happen if you invested your money instead of saving it in a bank account. According to Hatch Invest, say you began with a $10,000 deposit and deposited an additional $500 a month into an account. If you were just saving this money, after 30 years you would have $302,000, whereas if you were investing this money, earning a 10% return, similar to the ones we've seen in the S&P 500, you would have $703,000 after 30 years with the same amount of money, giving you an additional $400,000. This is the power of compound interest over time. Imagine you're rolling a small snowball down a hill. While growing slowly at first, eventually it picks up speed and size as it accelerates down the hill. In fact, Warren Buffett made about 99% of his wealth after turning 50. And let's just clear up one common misconception. You don't need a lot of money to start investing. You make a lot of money by investing. A popular strategy you can use is dollar cost averaging, also known as DCA, which is putting a set amount either weekly or monthly into your accounts of the same amount. This helps balance out volatility and just keeping emotions out of your investing. If your employer offers a 401k match, be sure to take advantage of this, as it's literally free money with a guaranteed 100% return, which you're not going to find anywhere else. In addition to this free money, you're also going to have a lower taxable income, meaning your tax bill at the end of the year will be lower. Another tax advantage account you can utilize is a Roth IRA, which is using post-tax dollars and contributing it into an account on your own outside of your employer. The limit is $7,000 per year, and it is much more flexible in terms of your investment choices. You can select really whatever you want, whereas with a 401k, you're stuck with what your employer offers. Like a 401k, a Roth IRA is a retirement account. The big difference being that instead of getting the tax advantages now with a lower tax bill this year, all withdrawals from a Roth IRA once you reach retirement age are tax-free. So you have $500,000 in a Roth IRA when you are retirement age. Not a single penny of that will be taxed. There are also no required distributions of that money. You can have it in there as long as you'd like. Recently, Robinhood began offering Roth IRAs to users on their platform, and they're actually offering a 1% match on eligible deposits. You can open an account using the link in my description below, and offering free stocks if you sign up using my link. If you're young, I recommend starting out with an S&P 500 ETF such as Vanguard's VOO, or a total market stock index fund such as Vanguard VTI. Please be sure to utilize these retirement accounts to their full advantage for maximum tax benefits, because no one wants to pay the tax man any more than they have to. So you have your 401k in place, getting the match from your employer, decreasing your taxable income today. You have your Roth IRA open as well, contributing to that regularly and getting tax advantages in the future when you retire. Now let's talk about real estate. I recommend putting money aside to save for a down payment on a house. We've seen the price of housing increase drastically over recent years, and make sure this money is in a high yield savings account earning monthly interest. While everyone needs a place to live, it's important to keep in mind that in addition to the down payment and mortgage costs, there's also yearly property taxes, maintenance, and other unexpected costs that may arise from homeownership. It really is a bit of a balancing act, but you do want to prioritize your tax advantage retirement accounts while simultaneously saving up for a down payment. You don't want to be in a situation where all your money is tied up in retirement accounts and you have no money for a down payment. Conversely, you have all your money saved for a down payment and you have nothing for retirement. In addition to stocks and real estate, gold is a popular position that people include in their portfolio. Gold has been used as a store of value for over 5,000 years, maintaining its value over time and hedging against the inflation of fiat currencies over the centuries. It's also worth mentioning that with all the macro uncertainty we're seeing in the markets today, central banks are hoarding gold, driving the price higher, with an ounce of gold currently going for around $3,100 per ounce. While currencies like the US dollar tend to trend downwards in value over time, an ounce of gold has always been able to get you a fine suit over the years. But Kevin, stocks, real estate, and gold sound boring. I want to make a ton of money. I want those sweet 10x gains, bro. While most new millionaires are minted with stocks and real estate, it would be unwise to ignore the meteoric rise in the price of certain cryptocurrencies, mainly Bitcoin. I remember my brother at the dinner table maybe 12 years ago talking about Bitcoin to my entire family when it was maybe a few $100s, trying to convince us that we should buy it, and we all looked at him like he was an idiot. Look who's laughing now. Man, oh man, how things would be different if we all listened to him. Assuming you've taken all the previous steps, I do think an allocation of around 1 to 5% in Bitcoin is a good choice, and that is not financial advice. But there you have it, a beginner's guide to start investing in 2025. If you found this helpful, please consider dropping a like and subscribing to the channel. If you have any questions, drop them in the comments below and I'll answer them there or in another video. I'll see you in the next one.